Hello, everybody. It's Harry Boxer, the technical trader at TheTechTrader.com. My site is The Tech Trader. Let me just share that with you real quickly. Um, let's see, share. Okay, hang on a sec. All right, so here you have my screen. This is my main page. When you log in, that's me, yours truly. My belief is that most people are chasing stocks, and coming here, you can access the real strong technical market analysis service for day and swing traders. I've been doing this for 6 decades. I'm 78, and people think that I'm 35 because of my energy level, and it's always been that way. I'm a type A guy, but I'm a big believer in pattern recognition. I've been studying it for half a century. I wrote a book on trading called Profitable Day and Swing Trading. I'm a big believer in bar charts. I don't dislike candles. I just don't feel like I need to because I've been very successful using bar charts, and I know them inside and out. I believe that the best way to day trade is to trade 1 minute intraday charts. 1 minute. For example, an AGQ, we came out today and took a look at it, and I felt, well, the stock was had gone up, spiked up, and ran up. And when I came in, it was already trading up around 71.5. So I said, let's look for a better entry opportunity. So we did a 5-wave Elliott wave pullback. Here's a 1, 2, and there's a 3, 4, 5. Once you get to the bottom of the 5th wave, the bottom of a channel, that's an excellent place to enter. But you don't want to catch a falling knife. You want to wait for something to start to break back out. So when you look for the declining top side to be broken, see the volume that came in here? Spike breakout, we went long at about 69.5. A few hours later, it's 72. You're not going to get rich, but you made 2.5 points on a nice little day trade, about a 3 or 4% trade, and we're looking for 73 tomorrow. But when you look at the daily chart as well, I want you to know that I've been long this stock since it spiked down in April, ran up and performed a platform and broke out there. We put a swing on it. That was in the 42.3 zone. After a 1, 2, 3, 4, 5-wave Elliott wave move, including what looks like 1, 2, 3, 4, 5 waves. In the 5th wave, it's called the 5th of the 5th. And when you get anything that goes up in 5 waves and a 5th of the 5th, and has gone from an April low at 31.88 to today's high 72, it's like 115, 20% for a silver exchange traded fund. This is an ETF. For a fund to go up that much in a 5 or 6 month period is huge. So I instructed, and if you look at the long-term resistance on this, the prior high back in 20 was 71.60. Today it hit 72.04. Good enough for me to be exiting the stock. That doesn't mean it can't blow off further, but at this point, one of my big philosophies in my site is don't be greedy. We're not going to get to the bottom. We're not going to catch the top. Sometimes we do, but for the most part, trying to get a big chunk in the middle when the stock's trending. Well, after the 5th wave, the risk reward is very low, meaning your risk is higher and your reward potential is lower. And I just want to me, the best place to buy a stock is after it's bottomed, formed the bottoming formation, and broken out. That was the best place right there. And if you see the volume that came in and then the breakaway gap that occurred after that, you were in for 1, 2, 3, not even 4 months, and we went from 42 to 72, roughly. So that's kind of Elliott wave. That's how I use my Elliott wave analysis, not only daily, but on an intraday basis. We use it on the downside to catch a wave to the upside. Simple stuff. And you get your Fibonacci retracements that I like to, and my favorite retracements are 0.382 and 618. Meaning 3/8 and 5/8 type of retracements. So if you take a look at the move from this low, 67, to that high at 71, about 4.5 points, and then it retraced down to 69-ish, you got a nice, about a 50% fib retracement. Also, there's a gap there. You have to always consider the various prior highs, gaps, and pullback. So look at these 2 double tops that were broken. They become support. It's also a gap. That becomes support. Comes down to it and bounces. A very good sign that after a 5th wave down to a key support level, you get a bounce. And it's usually a very, very reliable trade after that. I'm going to show you a perfect longer-term Elliott wave move. Now, Cheesecake Factory had a beautiful base from 22 to October, November of 24. There's your breakout. Now, for me, this is the first wave off the low, 1, 2, and this is 3, 4, 5. So we went long when it broke out here in the low 40s, and when it hit 60, I think it was 68 or 9, 68, 69.70 was the high. We got out at that range on the fifth wave near the top of the channel. It's just basic stuff, folks. If you learn it and use it, you're much more liable to make, you know what? I forgot I got to go back and share my chart. Just a moment. This is important. Just a second. I've been talking about a chart and not even showing it to you. My bad. You should see the charts now. David, can you see the charts now? Anybody?
Yeah, I see cake.
Okay, good. So I believe I had shared my other screen and didn't reshare the charts. So now that we've done that, I'm just going to do a quick review of AGQ because you didn't get a chance to see it, and since I'm only on my second chart. AGQ was a five-wave move after it plunged and popped in front of the platform. This is called the V bottom of the platform. It broke out. We went long. 1, 2, 3, 4, 5. We went out from 42 to 72. As a matter of fact, we were out today. On the intraday basis, I decided after it popped up to a resistance level and came down in a 1, 2, 3, 4, 5 wave decline to a key support area here where there's a gap and a double top that was broken. That became support and certainly bounced off of that. We made a nice day trade there. Cheesecake was a swing trade. And when it broke out of the base, we went long. Since it already had a 1, 2, I was looking for 3, 4, 5. We got it. And I was out a couple weeks ago in the high 60s. CAPR today exploded pre-market. And we do trade a lot in my room pre-market. When I saw the 1, 2, that wedge, we went long in the breakout. And that was at about 635. It popped the pullback and went again. And I told people, well, since if you really counted properly, it's a 1, 2, 3, 4, 5, Elliott wave, fifth wave. So I told them to sell half there and put a tight stop under there, which it never broke. It got right down to this level and then spiked one more time. And I told them, let's not get too greedy. And we got out of the, I think it was around 7:15:20. And as you can see, didn't do anything the rest of the day. So that's how I apply Elliott wave, both on intraday, 1 minute, both up and down, and on daily charts. I want to show you some more of those. EVAX. Now, if you go back in time, which is what I always like to do when I'm showing charts, let's take a look at where it was when I came in and what I did with it. Well, it formed it popped sharply. One of my guys in my room said, take a look at EVAX. It just exploded. So when it popped and pulled back here, it formed a little wedge. We actually bought it on this breakout. See the volume pick up? But then it backed off and gave an opportunity as it retested right there. So a new channel had begun because it broke out. It literally went from 380 to 520 for $1.40 in 5 minutes. Some of us got out, did a quick little scalp day trade. That was a beauty, more than a scalp. But then take a look at the rest of the day, what happened with this stock. It did a 1, 2, 3, 4, and I consider this 1, 2, 3, 4, 5, or a fifth of a fifth. And we got out on this spike volume at about 550. It got as high as 565. It came all the way down. And here's what it did the rest of the day. This is why I don't want to stay in the stock all day. It may do this and go nowhere, and you're wasting time and money. But if you were in on a timing basis properly, you made nice money on EVX this morning. GLTO is another idea that came in right after the close. It popped and pulled back, and it did it on a low volume. Now, I had the theory. It's called the low volume ebb. You know how stocks in the ocean, when the waves go out and they stall for a second, then they come back in. That's called ebb tide. Well, the same thing happens to stocks. The tide goes out, the tide comes in, it gets very quiet, very quiet. Look at that little bar here, 4,600 shares. That was it, and then it popped. And that's where we went long at about 5:15. Within 2 minutes, it was 610. A lot of us just traded it out there. I was looking for a fifth wave. We got a 1, 2, 3, 4, but it broke down here. So those of you who are disciplined in my room, and I always believe in playing stops and knowing where your stops and targets are. The stop was under 540. We got stopped out there for half, around 538 or something like that. But if you sold some at 580.90 and some 538, you're out at about 565 when your entry was a lot lower, so you made money no matter what. And that's the way you protect yourself. Number one question I get when I'm trading is, how do you stay in a trade? Because I always sell too soon. The reason you sell too soon is you see a quick profit and you want to jump on it. Well, one of the ways of staying in it is only sell a piece of it and raise your stop, which I instruct all day in my room. When you get a trade in my room, I tell you what the stock is. I tell you what the targets are, a couple targets usually, and I tell you what the stops are, where their support level is. And so we trade them all day. And I continually do live webinars and show you the charts as they're developing through the session. Take a look at HIMZ today. This is the ETF for HIMS. So the market opened, it took a dip down to 1822 and then popped and formed this coil. And I told my people, if this breaks the coil, we go long. Right there, pop, at 1965. It went up to about 2060, a dollar, pulled back and formed a little, call this 1, 2, 3, 4. It's a fourth wave coil. I mean, looking for a fifth wave. We got it. It pulled back to above 20. I thought my stop was 1990, and it went up to 2147 from where we entered at about 1967 for about $1.90, about 10% trade. And it only took it took a few hours, but still, even now, at the end of the day, after hours, it's forming another bull coil. Now, rule of thumb is sell on the fifth wave, but when the stock keeps going, you may get a sixth and a seventh. We see that a lot in the stock that's very powerful. The one thing's missing from this stock, volume. One of the reasons I automatically sell at a fifth wave when I don't see the volume I want to see. If the volume is very strong, we stay long. IONQ, look at the daily chart on this one. Well, this broke out of a base here, and it went 1, 2, 3, 4, and 5. And that's the way I count it. But we were long in the 8-9 zone. I got a lot of our stock at 20, some at 30. This stock eventually went to 54. And that took about 90 days, from 8 to 54. It then plunged, that one bar dipped down and then bounced up. Volume got quiet on the bounce. When it started to roll over, there's my stop right there under that bar right here. I can go back in time and show it to you. What you want to do is when we see a platform and you see trend line, if a stock breaks both at the same time, for example, this one broke here, breaking the pullback low, the moving averages that already crossed over, a warning sign, and then the trend line broke, the parallel trend line. Stocks tend to move in 45-degree angle up rising channels when they go. When they break, you want to be out of them. You can see what happened here. Eventually, this is what happened. A large 1, 2, and then a third wave that didn't make a new high, a double top, but it went sideways and formed the fourth wave. The fifth wave just happened, and we got out in the 70 range. Traded 76. 69 last. How do you utilize waves? That's how you do it. This is a beauty. Kodiak Biosciences. I first saw it when it broke this declining top line and it was in a downtrend. And it did with a pop in volume here. Let's take a look back in time when the volume is different. Here. See the volume cluster? That's where it broke out. And then it formed a flag. So I indicated if this gets above that, we're going long. I know we traded this for a couple of day trades. It popped, pulled right back, but it held the moving averages, I believe. Let's take a look. Nope, you might have gotten stopped out there. Let's go back a little bit. Let's go further. Okay, so what's forming now is narrowing bull coil, and wave is 1, 2. So I'm looking for a breakout of the second wave. Once we get it, we go even longer, or if you were stopped out, for example, you may want to reconsider it. Probably above this level. See these highs in here? That's the level I was looking for, and that was over 450.52. Over 450.52 with volume, I'm going to go long. Boom, right there. Another peak There's your breakout. Watch what happens. Boom. From 495 to 886, nearly doubled. Well, let's call it 60 to 70% in about 5 or 6 days. Then it formed another wedge or coil. Let's see. Didn't take long, did it? Made it all the way up to 12 from where we first got in at 5. That was a nice swing. Now, check what happened. Another coil developed. You see this coil? And my instructions to my traders were I picked it as a swing long if it breaks with any kind of volume. Check out this volume in the breakout. Pop. So look at the volume. 5.7 million, unheard of for this stock. But I also want to point out it's a 1, 2, 3, 4, 5, and the stock has gone from 2 to today's high over 19. When you go to from 2 to 19 in 6 months, it's always vulnerable. Now, it did pull back during the day today, and I told a lot of my people when I got to 19, you can exit at least half your position, raise your stop to about 16. So basically, our positions are out. Doesn't mean it can't go higher, but I'd like to see a setup coil flag or some consolidation in here. Stocks just don't go all the way straight in a vertical. Sometimes they do, but normally they'll do stair-step moves like pop, coil, and then go again. So that's a 1, 2, 3, 4, 5 wave that we are out technically. I want to see what it looked like intraday today because we're always trading these stocks, especially when there's momentum. This one was a little tough. It did a 1, 2, 3, 4, 5, but it was choppy. Now, here's an interesting one that was the government just took a 10% position in this company as lithium, LAC, and the stock, when that news came out, went vertical and then formed the bull coil. When I see a break from a bull coil after the first spike, I usually go long. But here's what I want to point out. Basic Elliott wave, right there in the morning. So we opened with a pop. We did a little rising flag. Well, rising flags are very powerful, usually indicative of a bigger move. Well, certainly when this broke 660, it went vertical from 660 to 811 for $1.50, and it only took about 12, 15 minutes. Then it went to a wedge. That's wave 4, 1, 2, 3, 4, and then it exploded right to my target at 8.5. Hit 850 to the penny, and then rolled over. So that was a great, successful trade for us. And that was today. And look what happened the rest of the day. Nothing. So that's why you don't want to sit with a stock and waste your time trying to hopefully it goes up again. You just sell it when you can. If you want to go back, and I always told, today I tell my traders, take a look at these lows in here, the rally back, this rally back. So obviously that's resistance. So I'm waiting for a move over 7.5 foot volume. We didn't get it. We didn't go in. But it's on my focus list. Every morning I create a list for my people. It takes me an hour and a half of pouring through charts, news. The only time I listen to news is in the morning because I want to see why stock's popping. And if it's powerful news, it may keep me in the stock longer because usually it's trending and there's a lot of volume on it. MP, what a chart. Check out this move. Now, this is today, but I want to show you something bigger after I'm done showing you the intraday 5-way move. Check this out. It exploded on the opening and quickly pulled back. So let's do this. It's a 1, 2, 3, 4, 5. So we had a fifth of a fifth, and I got my people out at 82 today. And here's what happened after that. Profit taking set in, of course. And it flitted away the rest of the day. That's why you got to take your profits when you can, not when you have to. This stock has gone from 82 back to 75. No reason to sit with it. Now, I want to show you the same chart that we had a swing on, and this was one of my best swings of the year. When it came out of this falling wedge and popped through the moving average, we went long at about 24. My targets were of 34, 38, and then it hit that target, it came down. When it broke out again, we went long again. And my targets were about 60 and 70. And look where it got to, 82.50. Came down and still moving up. Phenomenal stock, one of the better ones of the year. Actually, fundamentally, when you look at it, It was the second largest rare earth company in the world behind China, and the stock was down from 70 to 10. So when I saw that and the inverse head and shoulders form and it started to break out, I was watching it pretty carefully. It was so anyway, we did a great trade, not only swing trade wise, but intraday on a 5-way move up. Had a good day trade on that too. Here's an example of an ETF for MSTR that popped in the morning and pulled back. And when it broke out, we went long. That was wave 2 breaking out to 3. 3 had a 1, 2, 3, 4, 5. And then 4 had a nice orderly flag. And then it spiked up into the close and after. But from where we got in about 580 to about 635, a nice little day trade, scalp trade in 5 waves up. And this is a bear ETF for MSTR, inverse. NB. This one moved in waves today. Let me give you the intraday chart. I'm sorry, that's the daily chart. So this is a 1-2. This is a 3-4. 4 is a double wave because it's a 1-2, didn't break out and pull back. I'll have to draw it for you so you can see it. Wave 1 and 2 was a falling wedge. Wave 3 and then 4 was a ascending wedge, and it broke out. So if you're looking at a basic Elliott wave structure, pop, pull back, hold the gap, hold the moving averages, and then run up to a new high and form a wedge. And then she goes. So that's why that was attractive to me in terms of the Elliott wave count. Now check this out after hours today. NITO. So when news hit on this stock today after hours, and sometimes we just do scalp day trades and stuff, but after hours is really intriguing to me, and so is pre-market. So often when I see a stock do this kind of move from 567 to 10 in 1 minute on 172,000 shares, not huge, but big for that stock. And then it pulls back and immediately the volume dissipates. And then it starts to move. I said, if it gets over 855, we go long. Well, it did that. And within 4 minutes was 1064. Pull back again and then wave 4. And then when wave 5, I had a target between 11 and 12. We had 1149. So from getting in at about 8.5 to 11 and change, that's $3. And it took about 15 minutes. And then you can see the rest of the day. This is why we sell the 5th wave. Notice the volume of the 5th wave is strong. If you get a volume of the 5th wave, it usually is an exit point. Now, if you wanted to hold it, where I would have stopped it would have been right there underneath this pullback low near the moving average. Because once it broke that, it broke everything. Notice the crossover moving averages. So I'm giving you examples of how we use Elliott wave. And when I'm done with my presentation, I'd like to take some questions from anyone out in the audience on any stock that you have. I'm going to give you a free analysis and analyze your trade for you. So get your symbols ready and or post them when you can, okay? So you can start throwing symbols out. I see a couple already. I'll get to them when I'm done with my presentation. ONDS, here's a stock that we've done great with. A long base pattern. Breakout here was a head fake that stopped us out. Sometimes a stock will do that. We call that a high volume zone. When it breaks out but doesn't fall through, it comes back into the base, it extends the base, but eventually does break out. To me, this is a perfect long 1, 2, 3, 4, 5. I'm actually thinking it's more of a 1, 2, 3, 4, 5 wave 1. I'm not sure this is long enough for wave 2, but I'm giving it that designation. 1, 2, and this is a 1, 2, 3, 4, 5. I'm now looking for the possibilities of a pullback, but it might get to 10 first or not. My target is 9. The first target is 9. If it pulls back and consolidates, then I'm looking for 11, 12. Very strong chart. I believe this is a drone manufacturer. Something like that. OPAD. This morning it popped and pulled back. I consider this wave two. It went 3, 4, 5. It gave us a trade from 4.5 to 485. Not a lot, but then it broke down. So I want to give examples of sometimes how they start to work, but they don't, and what you have to do about it in terms of stops. When I see a stock that breaks the support level and bounces back to another level near that prior support, it does it on very low volume with no technicals and fails at the moving average. It's usually an exit there, sometimes even a good short. It went from 450 to 415 very quickly, and now you can see where it is the rest of the day. So that was a failed trade. But looking at the overall daily chart, it's a very promising, explosive move from $1.25 to 635, almost sixfold in about 4 days. So it's going to go into a long consolidation. Looking at the overall chart pattern, a long downtrend. This is a reverse split stock, and this is an explosive pop and coil. Something to watch because it moved over 560 across there. Would show many possibilities of 7.5, 8.5, 9 up in the, if not a measured move to 9 or 10. So this is something that could be very viable swing trade. Keep an eye on it. Another is open. When a stock explodes this much, take a look at this. 53 cents to 497. That's nearly a tenfold move in 2.5 weeks. It's going to get your pullback consolidation. But it was a falling wedge, and when it broke out right there across this level, right there, is where we said we're going long. But at that level, it was only 265. And within a month, it was 1070. Beautiful swing. And it doesn't look like it's done yet. Quite frankly, if it holds here and keeps going, it might be somewhere in the high teens to low 20s. This is a powerful chart. But you always have to keep your stop in mind. And anything under the recent pullback low of 690 would be exit stage left. Now, how many waves is this? Looks like a 1, 2, and a 3, 4. That's why we're looking for a fifth wave. And even the third wave is a 1, 2, 3, 4, 5, meaning 5 waves within the third wave, and then wave 4 develops. And now we're trying to break out. If we do, it could be powerful and move, double. It could double or triple from here. PEPG, let's take a look at today's action. The stock popped and pulled back pre-market. Let me get back into that time frame. It formed a coil, and then when the volume picked up as it broke out here, we went long for 5.25 thereabout. It made it up to 6.25, coiled for a couple hours, and from 6.25 it went to 771. So 5.25 to 771, hell of a trade. And this is what it did the rest of the day. But it was 1, 2, 3, 4, 5 with volume on the fifth wave. We always sell fifth wave volume. Why take a chance? The risk reward's too high. And this is what it did the rest of the day. It's a waste of your time, energy, and money to sit with a stock that has already made its move and you're still looking for more. Don't be picky. QBTS, check this move out. This is a tremendous quantum stock, quantum computing, that technically broke out across here. It did a very fast 5-way move up and pulled back. But this is a 1, 2. Technically, this is a 1, 2. That whole coil is wave 2. It broke out, and this whole consolidation is wave 4. I'm looking for a fifth wave. It's begun already. But take a look at where this can go, just based on the angle of ascent if it continues. And of course, my take on the market right now is it's extremely vulnerable. So these momentum stocks could get hammered. You might see a pullback back into the low 20s. But at some point, this could be 38, 45, 50 or more. Depends on whether the quantum stocks continue. But I see another wave coming potentially in that and a few others in that group, like Red Cat being one. This is a perfect 1, 2, 3, 4, 5-way move here. We benefited by that. And it did a 1, 2, 3, 4, 5 wave. The fifth wave was shortened or truncated, double bottomed, and it moved back up again. But that's how we use the Elliott wave. Now, in the solar group, I like run, RUN. Long, long downtrend. Here's a stock that was, Wall Street darling, went up to $100. Then they dropped it down, believe it or not, to $5, 545 the low. It subsequently tripled in a 1, 2, 3, 4. I think the solar group's hot enough that this could be 22 to 25 on a fifth wave, but obviously only with tight stops under about 15 now. So that's what I'm looking for, the fifth wave up. Silex, check out the daily chart. Breaks out of a base, spikes up in one, really ran hard. There's 2, 3, 4, 5. Fifth, and it may be done here because it just reversed a high volume reversal. That's never a good thing. It's called an engulfing reversal day, where it makes a new high and comes down, makes a slightly lower low, and closes negative on the day, and the next 2 days didn't go anywhere. So for me, this is very dangerous. If the market goes higher, we might see a spike into the high 30s. It's possible, but the risk reward, again, when you look at a stock, I always hesitate to put new swings on when I see a big move like that, because there's so many people in built-in profits that as soon as they see a break, they're going to take their profits and or stop out. So that's why I like to see the risk reward is much better when a stock's breaking out of a base and or trending than it is after it's had 5 waves up, obviously. But that's how you can tell whether you should be going long a stock or chasing it or not. I don't like to use the word chasing. I never chase stocks. SPRC. I'm going to show you how we traded this today. So it exploded and then came in a falling wedge. Now, this falling wedge showed a snapback and then another pullback. And I said to my people, this is a left shoulder head, right shoulder. If you take this level out at about 480, 85, we should go long. Not only did we go long, but it pulled back and did it on low volume from low volume ebb. And perfect entry opportunity there at about 533. Well, within a half an hour, it was 890. A great trade there, and it did it quickly. But it also had 5 waves, and the volume was heavy enough for me to say, let's exit the stock. Those who didn't were stopped out at 730, and within about 3-4 hours, it was down to 5.25 or 530. So it's just makes no sense to stay in a stock when it's trended, giving you the waves you wanted, and spiked up on volume into that wave, and you didn't take profits. So you ask yourself why, because usually it's because you're greedy. Trading is not easy, but if you're smart, disciplined, and focused, know what your trading rules are, you can do very well. You come to my site, TheTechTrader.com, spend some time in my room, 2-week free trial, no credit card, just sign up, come on in and check us out. It's a wild and crazy place, but it's fun to be there, and people there are very friendly and mentoring if that's something you need. But more importantly, you can have direct access to me, asking me questions any time of the day, and I'll answer them. A couple more ideas, and then we'll go to some questions. Please keep your questions coming. If you have any stocks you want me to go over, just post a symbol. I'll get to you in a moment. Here's a nice little day trade on TSLQ. I want to show you something. TSLQ is a short Tesla exchange traded fund. Well, in the morning, I saw this 1, 2, 3, 4, 5. And when it pulled back and broke out, we went long. It popped and coiled, and then went again and pulled back. In essence, this is a long 1, 2, 3, 4, and then the fifth wave may have started. This might have a follow through to the upside, meaning Tesla's going lower. And finally, TZA is a day trading we did today, long. And the market started, pre-market looked weak. And this one was trending already from yesterday. I said this is going to extend probably. And that was here at about 820. My target was 850, 560. We hit 866 and backed off. And you can see at the end of the day, we're still consolidating, maybe for tomorrow. We'll see. Anyway, this is a summary of what we do at the TechTrader.com every day, both intraday 1-minute charts, swing trades, usually using daily 15-minute hourly charts but it's a place where I prepare every morning for an hour and 20 minutes. I get live on the air with you pre-market. I do a pre-market webinar. I show you the charts that we're focusing on. There may be several day trades that I've already put out as day trades with target stops, and you'll know where you should be exiting and entering. Well, most importantly is I don't hold your hand and tell you where to enter, but I do tell you what the targets and stops are. Where you enter is up to you. Where you exit is up to you, but I usually give you guidance on that, telling you what the targets are. I always recommend when you get to my target, exit a portion of your trade. The way to stay in a trade is not to sell all at once. People tend to do that. It's buy it all at once, sell it all at once. You don't need to do that. There's nothing wrong with buying. Say you want to buy 3,000 shares of something. Nothing wrong with buying 1,000, watching to see if it makes a higher high, add another 1,000, and if it keeps the trend going, add another 1,000. You average up, not down. You average down, you're asking for problems. The stock can keep going lower and keep going against you. So we got some symbols here and some questions. Let me answer the questions first. A lot of stocks are small caps. Is there a reason for that? No, I tend to trade small, medium caps, but I also trade big ones. When I see any major player, I'm always putting out, $200, $300, $400 stocks. If the chart is there and if the pattern is there, I just gave you the different examples today. Looks like linear and absolute. I'm not sure what that means. Is that a question or a comment? All right. Oh, do I use log or absolute price scale? Yeah, no. This is logarithmic. It's not absolute. Okay. Also, let's go with some symbols. We'll start off with MSTR. Well, MSTR is again a long 1, 2, 3, 4, 5 wave 1, wave 2, wave 3, wave 4. So technically, if that's a 1, now this is actually a 1, 2, 3, 4, 5 waves. And so now that the 5th wave has been completed and we're not unable to make a new high, that's the reason I showed you MST. MSTX is 1. Now the opposite side is, hang on one sec, folks. There it is, MSTZ. Right now, I'd rather be long this stock, which has got an inverse head and shoulders and breaking out. And I would be very careful at MSTR. It's very vulnerable. Not always Bitcoin vulnerable, but take a look at the breakdown today. It formed the top, it broke down. It formed a little flag type formation, it broke that. Right now, I'm telling you that this looks like a $240, $45 stock, which means we could lose 50 points on it here. 50. Be very careful with this. Now, Tesla has a great chart. I told everybody after it broke the coil that if it breaks the high, you should go long. That was 367. From there, it went vertical to 445. Big, like 80-point move. And it's in a rising flag, but it broke that flag today. And it was an engulfing bearish bar with increasing volume, not huge, but increasing volume. I'd be careful with Tesla. Minimum target for Tesla is 402 to 5. We break that, we're looking at 385. One of my favorite stocks of the year, OKLO, which I didn't show you, and also a swing trade. Check this out. We were long here when it broke out of that pattern. It did 1, 2, 3, 4, 5, and now it went 6, 7. It's a huge move. It's gone from literally $5 to 140, 143. This is so overbought and overowned. Now coming down hard. I would stop under today's low. Under 104.5, stock could be down in the 75.80 range again. Wouldn't shock me. Don't forget, this is a popular nano-nuclear type play along with NNE and SMR. They all look the same. SMR. Many, many waves up. Here's a stock that went from 2 to 60. Not quite. 2 to 53. But that looks like a left shoulder, head, right shoulder, massive head and shoulder top. You must be stopping this under 30, 30 and a half. So that whole group looks vulnerable. And yeah, that's what I would say. Be careful with that. My take is it's bearish. URNM. Oh, that's the ETF for the uranium group. Well, I like that group a lot for a long time, and there's no denying the channel. And also today's action on this was terrific. Uranium stocks did well. A lot of that has to do, I think, with the government getting involved with the companies and taking equity stakes. And I don't know how long that is going to last. So be careful. The stock I like the most in that group is CCJ. It's the big boy in the group, and you can see how it looks very similar to the URNM, almost exactly. So yeah, I would say stay long, but stop under 54 and a half. I'd actually stop under today's low. It's a big reversal. Stop under 55 and a half, 3/4. So keep the questions coming, folks. If you have any more symbols, I'd be glad to answer them. SILI. Oh, is that SI? Oh, SILJ. Sorry. All right. This is another ETF for silver miners, way extended. Now, it doesn't mean it's done, but you can see it's accelerating way above the 50-day moving average, which right now is down at 1766 and the stock at nearly 22. So anytime the stock's 4 or 5 points above its moving average, it always comes back to the mean average, or it will, like for example, see how far above it was here, and it came back. It took some time to develop, a couple months. It may very well go into a couple months here. Do I think silver and gold can go higher? Yeah, I do. This might be 25, it might be 28, but be careful and keep raising your stops on this. For now, 100% stop under 19 and a half. Got that? When will UPS and Target ever make sense? Never. Look, UPS, let's see. Wow. Yeah, they make sense on the short side. Nothing wrong with that. Look at this chart. You want to know when to buy it? You want to catch a falling knife? And all you're going to do is cut your fingers. Well, the one good thing I can say about this stock, if any, is it's at a long-term support level. It doesn't mean it's not going to break that level and go lower. I can easily see the stock, in the mid 60s, high 50s. Do not try to pick a bottom of this. Matter of fact, what I would do is pay up on it, at least for starters, probably over 90, 89, 90. But once it does that, maybe it's reversed. But even then, always look at your declining tops line. The trend is down. You don't want to buck a trend. And this was like a bear flag, likely to go lower, in my opinion. And Target, TGT, same thing here. They've both been in bear markets for a year, 2 years, 3 years. No one knows what the reason is why stocks go down, other than more sellers than buyers, right? But when you look at the overall pattern of a stock, 1, 2, 3, there's a bear flag. This could be a long 1, 2, 3, but it looks like 1, 2, 3, 4, 5 waves down. Again, until it gets back above the top of this wave of over 109 with volume, I wouldn't touch it. Because then the trend is turned, or it might have been. If this declining top line is taken out, lateral price resistance, the 50-day moving average, when that's taken out, then you have a trend that's back up. Right now, again, you're catching a falling knife. This stock could be 50 or 60 before it's over. Do yourself a favor, stay away. Some more symbols, GLD, obviously that's the gold trust. Again, if you're in GLD, there's no reason to sell it other than it's overbought. And it's got a long 1, 2, 3, 4, 5. That's wave 1, 2, 3, 4. We're in the 5th wave, and it might get up to 400 if the gold and silver want to spike here, especially if the market comes down. But what I've been seeing is gold, Bitcoin, the market all going up at the same time. Very rare that usually gold and silver are places for safe haven, and that's where and utilities and stuff like that. But not now. So with gold when it broke through 188, I knew this was going higher. Right now, just keep raising your stops. I would have to say under 325, around there would be my out. But the target is 380 to 390 or more. We have a question on GEV from Mr. Coffee or somebody Coffee. Was he saying coffee? Anyway, it's like 1, 2, 3, 4, 5 waves as well. This is GE Verona. On the plus side, that might be a bull wedge. But I would stop under 580, under 565. Because then you're vulnerable to 470. On a long-term basis, it wouldn't shock me if the angle looks like this, and that should channel up, that we get some sort of move back down towards 470, 75. I'm not kidding. But that would be a long 1, 2, 3, 4, and then the fifth wave takes you at 900, possibly longer term. A symbol on FETH. Fairly new IPO? No, hang on a second. Fidelity Ethereum Fund. Okay. Well, it's a good chart with a 1, 2, 3, 4. I think that's the way it looks. That's my take. I'm not an expert in LE but I'm pretty good at it. I use it every day in trading, so I must be good at it. 1, 2, 3, 4. Here's what you got to do. See this last pullback low? Draw your line right there. It should hold and go. If it doesn't, it breaks down. You want to be out of it under 35, 5.5. 35, 5.5 stop. You don't want to see it go back in the high 20s or mid 20s. So that's where your stop is. Right now, I'm concerned because this pattern looking like a bull coil broke down already. I think the whole crypto world is going to have a big comeuppance, as they say. But we'll see. But the target is high 50s and then high 60s if it continues, if momentum continues. I wouldn't bet the farm on it. Is IBM on my radar? Yes. I was really surprised when it broke down that it didn't go lower because this stock's in a fantastic uptrend. But I thought it was breaking. 122 to almost 300. I would call this a 1, 2, 3, 4, 5. So this doesn't make a new high. The juxtaposition of the rising channels and trend tell me that 325 is the target if it breaks out. If it breaks down, you want to be stopping this right there. Under 230, 33, out. It's a long way from here. So if you want something tighter, stop at the 255. You may even want to stop it under today's low. There's a big deal there. On the 267. You can always, and that's another thing. Why do you have to buy or sell everything all at once? If you want to stop it out, but you want to hold it, you stop a third under the most recent low. Say you have 3,000. You stop 3,000, 1,000 there, 1,000 there, and 1,000 under the trend line. Because if it goes below that, it's vulnerable all the way down to the 200 range again, of course. Folks, look, I've been through more bear markets than I care to tell you. And I can tell you what, just as it looks like this on the way up, it looks the same way on the way down. Now, my buddy Avi of Elliott Wave Trader thinks we could be going into a generational bear market that could last years. But we may not be at the top yet. That's all I'll say on that. Folks, if you have any more symbols, please post them now. Okay, Caterpillar. Cats had a nice move off the low. It's also 1, 2, 3, 4, 5. So when the stock is an extended move, even like Cat, major low at 267, up to 485, almost doubling. You draw a line across here, and you'll know where your support is. If this stock at any point gets underneath 40507, it's an out. Because once that breaks, the channel breaks. When you break key support, I don't care how good this company is. It's a good time to buy a bad stock. It's a bad time to buy a good stock. Simple as that. At this point, based on what I'm seeing the last 5 days, looks like a high volume reversal bar, and it's coming down. I might even be tempted to put a stop on a 459 right here, for sure under 440. You break 440, you're breaking trend line, moving average, and price support, and that's a place to be out of it. If it does extend and the market continues, which I don't think it's going to, but if it does, 545 is my target. You might get a blow off. It's possible. Some more symbols. CMI, Cummins, 1, 2, 3, 4, 5 again. You're seeing a lot of that with major players and large cap stocks. And that tells me the trend is so mature that it's vulnerable. 1, 2, 3, 4, and the fifth wave may only be 1, 2. Meaning if it's only 1, 2, we could get 3, 4, and 5 and get this up to 465. Still possible. I would 100% stop under here, though. You don't want to enter any bear phase or bear market with any stock that's gone up that much without protection. So 388 underneath that, out skis. I'm going to project the target, as I said, 450, 55. Oracle, today it was announced that they are, I think, the majority owner of TikTok. So is this a move in anticipation of that? Yeah, I think so. Double bottomed in April. It went from about 120, eventually all the way up to 345 in that range. The problem is that the big gap here caused this. Now, it either is a bull wedge and it's going to blow higher, or it breaks down. And I would say that on a breakdown, under 265.68 is a definite out, but I would rather not watch the stock go that low. Quite frankly, probably 275 is a good stop. If it does go and blows off or something like that, 405.10 would be your target zone for that. SRUUF is another uranium. 1, 2, 3, 4, 5. Notice this 5-wave decline, long term. 1, 2, 3, 4, and 5. Then it turns around into 1, 2, 3. So is it done? It could be a 3-wave corrective, but for me, and it's right at resistance here. So if it should get through 20 and a half, it might run to the 22 and a half and then 24 and 3/4, 25 range to test these highs up here. So I like it overall, but I wouldn't get cocky. I definitely want to stop this one under here. If the uranium group starts falling apart, 17 and a quarter is my out. But you know your targets are 22 and a half and 24 and a half, 3/4. Well, Raj, really good technical questions. Any way of knowing how deep it can be? You just got to go. No, the market always goes further than you think it's going to go, both ways, up and down. That's all I'm going to say. If you're in something and you're at a point where you want to sell it, but you're not sure when, you can always use trailing stops, and I hate trailing stops, or stops below moving averages, trend lines, and price support where I put my stops. And now I'll look at the S&P 500. I think we're going to end it there, David. So long run, we've gone from 48.35, which I think was actually 48.02 intraday low. But nevertheless, let's just say we went from 48 to 67, 1,800 points. Massive move, but a really sharp rising channel. The first sign of danger is under the 21-day moving average, which is this here, at about 65.57. Underneath that, you have a chance of cracking the trend line. The next support is 64.50, 6,400. And this is a big number for me. I don't want to see the market under this level because then it gets really ugly. 60, I think the pullback should end at 63.75. And if it doesn't, that's where things get really ugly. But I do think if you get down to 63.75, you should get a bounce up to 65.50 or 75, and then maybe you roll over. But for now, I'm not a bear. I've never been a bear, but I'll be bearish when it's necessary. Right now, the S&P 500 down 3 days in a row is the first time we've seen that since here. But each time we've seen 3-4 days in a row, the market should always recovers until it doesn't. Thank you, RP, whoever that is. And that is it, folks, for today. Please join me at thetechtrader.com. Come in my room for free for a couple of weeks. Free meaning no credit card required, nothing. Just come in and join us. A lot of people tell me they make enough money in 2 weeks to pay for the first year. So, and it's easy. And because I do it all for you. Listen to me, stay disciplined, stay focused, and get some rest because you always can't trade exhausted, and you can't trade with anything negative on your mind. You're better off not trading. You always make mistakes. For now, this is Harry Boxer, otherwise known as the Tech Trader. I'll talk to you guys later, and thanks for being here. Look forward to seeing you, some of you on the site. Bye for now.